Hi everyone. It feels like forever since I've done a whole portfolio update. I used to do these quarterly, but let's do one today so you can see what adjustments I've made because there have been quite a lot. You can see here quite a lot of major adjustments in the portfolio. So let's go over each and every one of them. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. First up, I still have worthy bonds. I am locked into these right now. They're not allowing redemptions, which was not the initial agreement. Still waiting to see if they're ever going to either cash these out in some form or fashion, or are they going to let me take the loss. Exactly how it's going to play out, I'm not sure, but for now, this is what I have with them. I've been trying to withdraw it for years at this point, but no changes. They do continue to rack up interest supposedly, but who knows if I'll ever get any of this money out. It's pretty annoying. I used to like them a lot, and then they had some problems during COVID. Apparently their new bond portfolios are doing quite well, and they're offering 7% on those, but they did have this problem before, and I just really would like to get my money out. Then I got Groundfloor. They did update their platform here. You can see current portfolio. I usually keep this between 10 and 11,000. If it gets a little too high, I start to withdraw money. The earnings have been a little bit rough over the last year. I did do a big write-off with them, which was actually pretty nice. I'll take that on my taxes this year. Either way, it's still making money. Not a ton of money, but it's doing better here over the recent past. You can see year to date $115 continues to do a little bit better to start off the year. And they did do this update to this platform here as well. You can see the earnings for the last year. Again, rolling basis, 9.2% over the last year to date, so they've improved quite a lot. The last year was a little bit rough, but like I said, doing better now. And you can see all the different investments here now. They also do a geographical alignment, which is interesting. You can see where you're most concentrated. Georgia and Florida, obviously very heavy for me, but really across the country, I'm pretty well invested. Expected rate of return around 11%. And you can see here over the last 6 months, not super great because I did do that big write-off in December, which took out a lot of the earnings for the year. But again, if you go year to date, pretty good, 9%. Expected rate is 12%, so pretty close to that. Overall, not bad there. All time, closer to 6.5% over the past. I think I've been with them for about 4 or 5 years at least. So pretty good, 6.5%, better than what you can get on the risk-free rate. Total earnings close to that, 8,200. Expected rate of return was a little bit higher, so that is a little concerning. But like I said, I did do that big write-off. And you can also see that breakdown here across the different risk factors in terms of borrower experience, different grades of loans, loan scores, and do some analysis there if you want to. But overall, I still like this platform. Right now, I'm doing a little bit of withdrawals, but I like to keep it above that $10,000 mark. Moving over to my Fundrise account, I do continue to add to this just a little bit. You can see 69,000 is the total for everything. Total contribution 61,000, almost 8,000 in returns. It's not super great, but it continues to do well this year. You can see on an annualized basis, 3.4% year to date. It does say slightly negative. I think that adjusted here. We were doing a little bit better year to date, but that went negative. Interesting to see that there. Overall, not terrible. Almost 20% over the past couple years. Definitely better places to put your money, but for now, there are some REITs that are doing better. Really where I've been putting my money is in their private credit. This is what I've been buying recently, and that's doing about 8% annualized. You can see this year 1.5%, continuing to do quite well. The returns doing well there as well. So overall good with that. I also have a little bit of venture capital money with them. Year to date, not great. Last year was very, very good at 11.6%. So interesting there. And then you can see other. This is actually stock in the Fundrise IPO. Realistically, I hope this platform gets bought out at some point, but it's okay. I put a very small amount of money just to kind of keep this going. I've thought about getting out of it, but I do think real estate's a good place to be, and I think they'll continue to improve over the next year to 2 years, and then I might reevaluate at that time. But for now, I'm just going to let this sit. The fees are pretty low. And like I said, I do like real estate currently. Moving over to my M1 portfolio, this is where I've been putting more money here recently. You can see net cash flows year to date, almost $800, $732. Pretty good there. Market gain about 1,000 year to date, which is good. Currently, the NASDAQ is negative for the year. The S&P's flash negative. I think they might be basically flat, but for this portfolio, continues to do well, stair stepping up. Dividends earned about $60 year to date. I would like that to be a little bit higher, but but overall good. Heavy on the real estate, heavy on the bonds. I've been talking about it seemingly every video. This is what I own in this portfolio. This is where I continue to buy things that pay dividends. VIG, Dividend Growth, Appreciation, Vanguard Value, those higher end stocks which continue to do really, really well this year. And then you can see JEPI and JEPQ, big dividend payers. JEPI is still positive, JEPQ not so much on the year, but either way, they pay big dividends. And you can see market gain, very small negative, dividends covering almost all of that. So that's the goal. Want to get those dividends in, own a little bit more of it every single month. And then VYM, high dividend payers, and then just some individual stocks. Most of these are dividend payers, not a whole lot in there. Very low dollar amounts as well. Costco, Amazon slightly negative year to date. Chipotle, not so great, but the rest of these doing quite well. Starbucks has really recovered quite a lot recently. Walmart also doing very, very well. So a lot of these doing quite well this year. So far, so good on this portfolio. Absolutely meeting the intent. Last up here, we got TSP. TSP sitting at just under 128,000, and you can see my breakdown here. Mostly bonds, just a little bit less cash than bonds, but stocks only at 20% here. I've been saying it. I think the market's overvalued. We've seen a long consolidation. We're starting to see breakdowns. I think this is the place to be. Even 20% stocks feels a little heavy here, but if we start to see a 5% move, I'll probably add to this on the stock side. If we see 10 to 15% for sure, I'll definitely probably go towards a 50-50 breakdown, something more along those lines. But for now, huge cash, pretty good amount of bonds there as well. Stocks, not nothing, but pretty low there, and you can see the returns not good for the year. And then you can see other activity. That's the stock that I sold and moved over to these bond accounts, plus 27, plus 26,000. So sold all this, moved it over into cash and bonds. And when they say cash here, just to be fair, this is government bonds. This is not actually cash. The fund return here is 0.75, but realistically, it's a little bit better than that. You can see the gains, $328. And just a quick look at the G fund here, you can see government notes, government bonds without any risk of principal loss and little volatility. Over the last year, it's done really well, 4.22%, because interest rates have been higher. And as long as that continues to be the case, that should be the returns right around that 4.2%. That 0.75 that we saw, I believe, is year to date. That makes sense to me, somewhere in that range, just short of 1%, because we are just short of that quarter. Overall, this is where a lot of my money is sitting, in these bond funds. And this F fund, this is the total bond market fund, and you can see pretty good returns so far. And I continue to expect bonds to perform well this year. So moving over to my quarterly tracker here, you can see those major adjustments. Bonds went up a ton since June. We've been talking about it. I really made these adjustments pretty early in the year. I think they made them in the January timeframe, but this has been how long it's been since I've made a video like this. So thought it was only fair that I continue to make these on a semi-regular basis. Huge adjustments, bonds going up 240%, and you can see stocks sold about half of my stocks. I still own some, but way less now than I did before. I used to own nearly 100,000 here in stocks, and now it's down to 45,000. So sold a ton of stock at current prices over the last month or so. Still buying some things like I talked about, still buying bonds, bond ETFs, and then buying real estate. You can see real estate continues to tick up pretty consistently over the last 6 months or so, a little bit more, 8 months or so. And then you can see trading continues to improve, not nearly as much as I would have wanted it to be. But remember, the stock market is down on the year. The S&Ps are down on the year. The Qs even more so. And so far, still positive on the year for me. So holding in there, just making slow and steady gains on those options. And then cash, ton of cash, saving up for a vehicle for the family. Also, I just want to keep a lot of powder dry right now. Just don't think there's a ton of opportunity slowly dollar cost averaging into some bond funds, real estate funds, like you saw on the M1 accounts. And then I do have a huge CD here. This was from the sale of a home. So keeping that money in a very safe space until I potentially need it to buy a new home at some point in the future. And then you can see my breakdown here. 30% trading, 26% bonds, real estate at 16%. Honestly, want that to be a little bit higher. Stocks, only 10% of my overall portfolio right now. CD, 10%. And then you can see here cash at 7%. Let me know down in the comment section what you think of my portfolio. How are you aligned with markets right now? Are you still sitting in a ton of stocks, or are you going risk off like I am? Let me know. Otherwise, like and subscribe if you got any value out of this video. If you like any of these platforms, check out the links in the description to help out the channel. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.